Welcome back, and let's put the spotlight on RPG Life Sciences. In Q3 of FY25, the company delivered a very strong set and hence the stock price reaction as well. But let's understand more about the outlook of the company, and we have been joined by Yugal Sikri, who's the MD of RPG Life Sciences. Good morning, Mr. Yugal, and thank you so much for your time. First up, congratulations on a great set. It's been indeed a strong quarter wherein not just your India business has once again done well, but your international business has also shown a double-digit growth. Even the API segment has performed very well. Help us with the outlook of Q4 and beyond. That can we expect this double-digit growth trajectory in the international business to continue? And for the full year of FY25, where do you see the sales headed?
Thank you, Srishti, for inviting me on the channel first, and thank you for the compliments for the results. Give me just a minute to contextualize and that would perhaps answer the question for Q4 as well as for the next year. The RPG Life Sciences growth story has been a very consistent growth story. Which means every year after year, our EBITDA margins have moved up. We used to have 11% margin. Today, we are on a 9-month basis, we are 27.8%. And this quarter, you have seen EBITDA margin going 30% plus. So the whole growth story has been a structural story. What do I mean by structural story? That we have the 5 pillars of growth fixed up for the domestic business, similarly 5 pillars of growth for the international business, and we are simply continually working on those 5 pillars, which has helped us. Basis which I can share with you with the confidence that the Q4 performance would be in line with what the trajectory you have seen so far. The at year-end performance also would be in line with what the trajectory you have seen so far, and going forward for the future years also is going to be accordingly. Now we have 3 businesses. Just to recall, 2/3 business comes from domestic. Remaining 1/3 comes from 19% comes from international formulation. 15% comes from API. We, as you rightly mentioned, we had a very strong 5-pillar strategy for domestic formulation, which has given us the results. The results are always ahead of market growth. We are currently at 1.6, 1.7 times of the market growth.
Absolutely.
Now we have both international formulation, API also contributing, which will enhance the business growth going forward.
Sure. What about the enhancing, business growth? You're talking about how momentum will continue, but the question is, FY26 going to see accelerated growth versus FY25? Because if I have it right, you're also looking at acquisitions. Is anything likely to materialize that can bump up the inorganic contribution?
Yeah, I think you have correctly noted and pointed out. Yes, the going forward FY26, when we have all the 3 growth engines, domestic formulation, international formulation, API, started firing, will have an impact. But the greater impact is likely to come in FY27. By that time, both the international formulations and the API plant will be functional. Not only functional, we'll have a new product pipeline also start showing up, and you'll see the commercial impact on those. Now, on the inorganic part, I can tell you we have around 159 crore as the cash surplus on our accounts now, on our books of accounts, and we have done the land assignment recently, which is also giving us a cash which will be 200 crore plus overall put together. And with that kitty, we are very, very actively looking at the acquisition. Acquisition is both in the formulation and the API space. Whatever gets materialized, as and when it gets materialized, you will hear out yourself.
All right, Mr. Yugal, my next question was related to the land monetization itself, the 200 crores that you are going to add in your kitty. Help us understand that where do you plan to deploy that? Is it only like the brownfield acquisition that you are looking at, or any plans for deploying more in the greenfield side as well?
Yeah, it actually, we are evaluating all kinds of opportunities, to be frank. We are looking at brownfield, we are looking at greenfield. Wherever we see a greater value accretion happening, we will actually opt for it. But only thing which I can assure you that we are active. We are active on the API front also very much as we are active on the formulation front.
On that note, we'll let you go. Thanks so much for making time and speaking with us today. That's the management of RPG Life Sciences talking about their business, but from one pharma company perhaps